The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Good morning, folks. Steve Rhodes filling in once again for Larry Pesavento while he's away. Today is September the 11th. Hard to believe that it's been 18 years since that fateful day, but it is. But we're going to focus on the markets today. So I'd love to hear from you. You can give me a call here at 877-927-6648. If you can't call in, you can always send me an email with your request of what it is you'd like me to take a look at for you. Do that at steve@tfnn.com. And inside the subject heading, if you'd be kind enough to put radio show question, make it much easier for me to get to your email versus, all the junk that each of us get through our email systems out there. Of course, in our Tiger's Den, they can just go ahead and send a private ping or public ping. Really doesn't matter. So let's go ahead and get this show started on Wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, filling in for Larry Pesavento. Currently, we've got the Dow Futures up about 38 points, S&P Futures up 3, NASDAQ up 16, and the Russell up 5. Russell 2000 of the 4 is the one that is leading the pack. It's up about 0.4% this morning. As we take a look at markets globally, we had the Shanghai finish off about 0.4%. That was 13 points to the downside. All the other major markets in the green. You had the Hang Seng up nearly 2%, 475 points. The Nikkei up 1%. That was 200 points. The S&P 500, the S&P 200, I should say, in Australia up 0.4% or 23 points. The DAX is up 102, and the FTSE is up 75 this morning. That's a 1% to the upside. Gold is flat or back $2. Trade out at $14.97. We'll begin our morning taking a look at the metals for John in Sarasota. You've got silver off 4 pennies. Light sweet crude up 30 cents right now. Natural gas pulling back just slightly. Treasury bonds down a full point. The 30-year as they continue to move lower. And so John in Sarasota, his question was, yesterday we talked about gold and the bearishness that it shows from a chart pattern standpoint. Now, that bearishness, let's go take a look at that. Let's walk through this one step at a time. The first step out here is the way that markets make tops or bottoms. We look for, and it's not 100% of the time, but when these patterns are present, we pay attention to them because they are signals of an impending change in trend out here. One of those ways is the Rhodes Momentum Indicator. It's 5 specific elements that take place that help us identify tops or bottoms. In this case here, price moving higher, doing less relative energy is one of those steps. Another one is waiting for the cavalry, waiting for bulls and bears. That's really the responsibility of traders each day, is to generate those bullish or bearish reversal candles. Now, those bullish and bearish reversal candles are important only at the completion of a pattern, or when they're testing support or resistance, they can be a very important sign. Well, in this case here with the gold contract moving higher, it had 3 different bearish reversal candles, all at about the same area. You had the shooting star candle. That's right here. That takes place on the trading session of August the 26th. Price moving higher, doing less relative energy. My system automatically draws these patterns. It adheres to my very specific protocol for these tops and bottoms. We then had a three-river evening star pattern that formed on August the 29th. And then we had another three-river evening star bearish engulfing candle on September the 5th, all in about this 1550-ish range out there, telling you and I that sellers were trying to do everything they could to push their foot forward, to push their foot on the gas. So now that takes us over to, now, by the way, where price is likely headed to is headed to 14, 12, 10. That'll be the first objective on the move lower. Now, we can see that yesterday was bar number 4 of a TD setup 9 count. There's a possibility that we'll get to a TD setup 9 count bottom over the course of the next many days, maybe not until Tuesday or so of next week. We'll just take things one step at a time. Here's the other elements that we know about gold. In order for gold to have a change in trend, or any instrument, right? I'm not picking on gold. This applies to any instrument. I'm agnostic to the instrument. The chart patterns are the same. It doesn't really matter what it is that we look for, and they're the same for all time frames, at least the way that I trade and use these signals. The cool thing is they apply to every single, and I do mean every single time frame available to you and I to trade upon. Now, we take a look at, in order for any instrument to have some type of change in trend, what it first must do is bust through support. So where is support, right? That's a key thing for you and I to take a look at. Thank goodness you and I have a couple of different tools to help us easily identify support. One of those tools brought to us by our friends over at TAS Market Profiles, and those are the profiles that I use. The blue ones on my screen right now, as we take a look at the December contract for gold, are the daily profiles. On my data box, it says top D, CTRD, bottom D. Top, the center, and the bottom of the box. The bottom of the box being support, the top being resistance, where sellers are at. The center line being where both buyers and sellers believe there's fair value. On the daily time frame here for the December contract, both the center and the bottom were at the same price level at 1508.40. If this was not a change in trend, that level would have held. That level did not hold. Now, we also have the weekly time frame profile, John, on my chart out here, and that weekly profile shows support, the bottom of its box at 1489.20. There's really going to be a change in trend out here, a significant change in trend. What we will see is a close below that level, 1489.20, and on a weekly basis. So today is Wednesday. You'd want to pay attention to that level come Friday. If you see a close below that level on Friday, what it says to both you and I is to anticipate a move down in gold to 1412. It may be a larger move than that, because we would go take a look at the weekly time frame. I'll change to the weekly time frame. It's going to, this chart here is just going to go ahead and keep the daily oscillator and change line out there. It gets a little bit squiggly out here. So if the gold contract closed below the bottom of its weekly profile, the real level that we'd be looking at over time. I'm not talking about by next week or something like that. I'm talking over time. You say over time, Steve, what do you mean? I say between now and January, February of next year, we'd be looking at price to pull back to 1286. If that unfolds, people will hate gold. You have no idea how many wealth managers I've had discussions with that have gotten their clients into the gold trade. And these guys are not folks, or gals, are not folks that are traders, so to speak. They're taking a look at the long term, and they've gotten them in up towards these highs out here. And so the beauty is, if in fact we get that opportunity, gold does push lower into one of those two levels that we took a look at, there are a lot of folks who are going to say never, never again out there. And that will be the beautiful setup for all of us tigers and tigresses. Now, John's question was, well, is the same thing going on with other metals out there? That was really his question. Well, if we take a look at the silver contract right now, what we're going to see with regard to silver, one of the other patterns that identifies tops and bottoms, or can identify a top or a bottom, is the TD setup 9 count. Now, the TD setup 9 count is what we use to identify where price had most recently broken out. Those were the lines we looked at in the daily and the weekly time frame for the gold contract. Well, in the case of silver, you can see that the high that was put in on a daily basis was bar number 8. And it's bar number 8, 9, or the bar following 9 that identifies the top or the bottom. Silver headed to $17.10 at a minimum. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Oh, I thought we were going to be able to do that. Hey, we've got a very, very special guest. Really not a guest. He's the host of this hour, Larry Pesavento. Larry, are you on the line?
Looking good, Billy Ray. Feeling good, Lewis.
Hey, there you go. Now, that's the surprise. That's the surprise for all our listeners out there. And so good to hear your voice. You're sounding healthy and strong. And take it away.
Well, I just want to let you know that we went over to Stonehenge yesterday, and on one of the tablets, believe it or not, one of these giant marble tablets, there was a little inscription that said, buy low and sell high. So I just wanted to let the folks know that there is something to that. It's okay perfect. Over here. We're having a lot of fun visiting our friends. We've got a big seminar this weekend, the 14th and 15th, and I'll be back on the air on the 19th. But I'm alive and well. Sarah and I having a good time. She's taking good care of me. So keep up the good work, Steve, and God bless you for helping me out, you and Basil and David. I really appreciate it. So
no
have a good
problem,
time, folks, and may God bless.
Larry, you still there?
Yes, sir.
Hey, great. So what's the so you're sitting over in the UK. There's obviously lots of discussions about Brexit and the currency, the pound, and so forth. What's the environment that you're seeing or feeling out there? What's the business environment like? What do you see when you talk to people? At the different places you go.
It's very positive. There are people that are for it. There are people that are against it. There's protesters. Just like they have, but not as violent there are in Hong Kong, but. You have to be safe here. There's a lot of things that happen in the city, just any big city, and since they don't have guns here, they're worried about stabbings and stuff, and people, they killed themselves on the railroad tracks, and it holds a train up for 2 days for the crime scene. So there's some bad parts, but there's some good parts. It's a beautiful city. We're right here on the Thames River, and it's really quite nice.
Yeah, how are you enjoying the strong dollar?
It's certainly different than Tucson, Arizona.
Right. So how are you enjoying the strong dollar and the weaker pound compared to other times when you've been over there?
Tom or Steve, I'm a short-term trader, and I've been bullish the pound for a very long time, and it's acting pretty good. The dollar weakened pretty much at that three-drive pattern that we saw, but we're in for some great volatility here through the rest of the fall and into early next year. It looks like it looks like we're going to have some really spectacular moves. And we're really looking forward to them. I'm hoping to share some of the things that we're looking at this seminar and a webinar for you folks in a couple of weeks. But it's really exciting stuff. Some things I've never seen before. I thought I'd seen everything, but I haven't. So I'll share it with you folks when I get back.
Oh, that's great, Larry. That's great. Hey, thanks for calling in and saying hello. I know everybody loves hearing your voice, and they miss you dearly, and they'll look forward to hearing your voice again on the 19th.
You got it, brother. So long, everyone.
You bet. Travel safe. LP, you've got to love that. So, Larry was talking about the pound. So let's just take a look at the Great British Pound out here and just take a look at what we know. Here's what we know right now. Let's just take a look at the daily time frame chart. What we can see is that it's really consolidating in between support and resistance. Now, support and resistance here established by our TD setup 9-count patterns. The resistance, in essence, is where price most recently broke down. So on a counter trend rally, just on a counter trend rally basis, it would not be unusual for price to make it up to resistance. And resistance here where the pound most recently broke down. Now, this is not a swing point. That's the beauty of this. When I first began learning about breakouts and breakdowns, we had to look all the way back towards a swing point. And when you take a look at this Great British Pound chart out here, I ask you the question, where is it that you would call the actual significant swing point out here? For most of us, I would have to say it'd be all the way up here at the shooting star back in the May timeframe. That would be your significant swing point. There's some junior swings along the way out there, but to call that resistance and to not realize that we have other levels where the pound had broken down, meaning 9 consecutive closes where each close was below the close of the bar 4 bars earlier. And that's what establishes this breakdown level. That's what establishes resistance for Stevie at 1.2523 out here, that is where the pound is likely headed to. Now, if price can close above that resistance level, it would then signal to you and I a change in trend because resistance should hold. Likewise, on support. Support should hold, just like gold should have been able to have held the support of that daily profile. It didn't. You go to the next time frame. The next time frame being the weekly from a profile standpoint. We know what that number is. Here on the Great British Pound, I don't have the TAS profiles. I just have a clean chart without those, but we can also see support and how this works. Support was at 1.2051. Now, that was established by that TD setup 9-count. And there was a question inside the den out here from John. Why do I say that price will go back to the breakout level or counter trend on a move higher back to the resistance level? And John, with Larry calling in, none of this was timed or anything, but it's really the perfect answer is just by looking at the charts to see how the chart patterns form out here. So in the case of the Great British Pound on a daily chart out here, we can see that coming off of this bottom, by the way, I didn't have a bottoming pattern. I'd have to really go investigate some other tools, maybe B equals CD patterns, wave counts. I'm not going to really do that right now because this leads into John's question here about the use of the TD setup 9-count and why price might come back to support or resistance or the breakdown or breakout level out here. So here when we take a look at the pound coming off of the bottom back in August of 2019, August 12th, it makes a move for a period of a couple of weeks. And during that move, it did have 9 consecutive closes where the close of each bar was above the bar or the close of the bar 4 bars earlier. That gets us to count number 9. Now, what we know about count number 9 or 8-9 or the bar following 9 is that when that appears, what you should anticipate is one of 3 things. And one of those things is a change in trend. The other could just simply be a hiccup or the other a sideways move. Okay, let's just take a look at this case here. The 9-count went ahead and identified a short-term top. And where did price move back to test? It pulled right back to where it had broken out. Now, we take a look at the body of the candle. The body of the candle is truly the essence of price. I just want you to think about it as maybe a child, a young child, not your child, but some other young child out there. The wicks, or the shadows, the upper and lower wicks, the upper and lower shadows, are nothing more than the extreme emotion that took place during that candle time period. These are daily charts out here. So, and it's not that they don't tell us a lot of information, the wicks. They do. If you take a look at the wick here on the trading day of September 3rd, you can see that during that session, you would have been saying to yourself, and rightfully so, except you have to say, hey, this is a daily chart, and I have to wait for the day's candle to end, is that intraday price pushed down well below that support level. But by the session end, the body of the candle, the close of the session, was above support. Now, that candle specifically told you a lot because it told you that sellers were able to, or buyers were able to really push those sellers out of the way with that long wick out there. No bullish reversal candle or anything along those lines. The upper shadow, the upper wick on that candle is too long for that to be a hammer candle. They must have very small shadows from the top of the close, the top of the candle, the body of the candle out there. This suggests here, because we're in its second 9 count, that maybe price is going to go ahead and make another 9 count. The question is, where does that 9 count complete? Above or below 1.2523 out here. Price trading within a consolidation. 120.51 and 125.23. Steve Rhodes with TFNN. Right.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the question was that John had posed is just asking about the TD9 count versus using Tommy DeMark's sequential system out there, and also why do I say that price will pull back to a to the bottom of the TD or the top of the TD setup 9 count, depending on how it's just simply, John, the answer to that question. First, the reason that on the show here we don't spend much time, very little time on the sequential system is because, as you know, those patterns don't show up as often as the TD9 count. The TD sequential system is a more difficult system for me to try to communicate to folks how it actually works and the nuances associated with that, whereas the 9 count shows up often. And the nice thing about the 9 count is that it provides you and I, this is after studying this on thousands of charts on multiple time frames for multiple instruments, that what it does is it provides us with a target as to where price will pull back. Now, when other patterns complete, before that target is hit, that actually would be a nice buy signal. So if gold generates a TD setup 9 count on the way down, does it before 1412, the breakout area, that would become a buyable type of a bottom. But we got to take things one day at a time, take a look at what's going on the longer term charts, and specifically with regard to gold or with regard to other instruments like the 30-year Treasury or even the U.S. equity markets. We really need to understand what's going on with regard to that commodity as far as other traders are concerned. So in other words, if Larry's out there giving a workshop this weekend, sounds like that's what he's going to do, we know that gold is going to come up. It's got to come up. And if Larry spends his entire time period on gold priced in dollars, a lot of those folks that are in the UK could give a rat's patootie about what gold is doing in dollars. They want to know about the very right-hand panel chart, what's gold doing in terms of pound sterling, because they're trading, they're buying, they're selling, and it's their local currency out there. And what we want to understand is what is going on with whatever the instrument is in all major currencies, especially a major type of asset or commodity out here. So it's always important to take a look at what's going on with regard to gold and euros, yen, pounds, as well as dollars out there. And you can do other currencies. You can do SDRs. You can do the yuan. It doesn't matter. You want to understand what buyers and sellers are looking at as it relates to their local currency. Now, in the case of silver, we were talking about silver. This is going back to John in Sarasota's question out here. Silver's got a slightly different pattern. We had that TD setup 9 count pattern. That identified the top for us, so we know that. Price is below Stevie's green line, 1861, tells us we have a falling price oscillator below zero. So it says, okay, continue to expect a further retracement. We know that the most recent breakout on silver is 1710. That becomes a target for us. But we also want to take a look at its TAS profiles. Now, its TAS profiles in that 1710 area, well, that would take us all the way down to the bottom of the weekly profile at 1717. The bottom of the daily profile out here is 1756. So all the conditions are set up right now for silver to fall back to 1756. But it's sitting from a daily standpoint in the last 4 days. Price has been sitting right around where both buyers and sellers believe there's fair value. That's the center of the daily box. That's at 1807. We're trading at 1807 as we speak right now. So this is the area where there's a tug of war, John in Sarasota. There's a tug of war going on. It's easy to understand. When we have these profiles, we understand where sellers reside, where buyers reside, and where they both reside. In other words, where they both believe that there's fair value, that they're right and the other side is wrong, well, that happens to come out at the price point of 1807. So it's really not that surprising that silver is at 1807 out here. But a move below 1790, that would be enough of a move to say silver headed to 1756. Now, not all metals are showing the same patterns. However, if you were a trader of platinum, as an example, you would be aware of the fact that platinum formed its high with a TD setup 9 count. It also did it with an A to B equals CD pattern. That A to B equals CD pattern would look like this. That's certainly one thing that Larry will teach, I would think, over the weekend. In the case of silver, or platinum, I apologize. We're looking at the platinum chart. I'm looking at the continuous contract. My apology for that, but that's the one that I've got present at the moment. But what you do see is the 1 to 1.618 A to B equals CD. Now, you'll see at the 1-to-1 level out here, if you watch this on Tiger TV, you do not see any kind of bearish reversal candle. This is why you cannot. Let me underscore that again. You cannot. Well, actually, you can do anything you want. I'm just suggesting that you do not just buy the 1-to-1 A to B equals CD or sell the 1-to-1 A to B equals CD. Why would you do that? That pattern only completes roughly 60% of the time. I don't even know if anyone has really done all the full statistics to be able to measure that, but that's roughly what it is that we say. That's, I believe, Larry's the one that's where that statistic comes from. LP himself out there when he taught me this pattern. Now, what he didn't teach me that I'm teaching you, that's what great artists do is they steal, and good artists only copy. I'm not interested in being good at anything. Now, I'm not saying great from a, pat myself on the back. Just basically master something. How do you master? How do you know? Because there's really three things that you either dabble or you stress or you master something. You just think about it as far as a sport. Golf looks easy on TV when you see those professionals out there. And so you get people say, I'm going to go do this. And as soon as they get out to the driving range or on the course and they realize, hey, it's a little bit more difficult, dabblers give up pretty quickly. Stressors will go out. Maybe they'll read books. They'll watch videos. They might hire a coach, but typically they don't. They get to a certain level. They can't break whatever it might be, 100, 90, 80, whatever level they might be at, and they just stress about it. Till finally they just simply give up. What masters do is masters understand that you're going to reach those peaks and troughs, that you're going to hit those peaks. Just try losing weight. How many of you have ever gone out there on a diet, so to speak, and you start to lose weight and you get to a stabilization point and you just sit there? If you're a stressor, you're going to give up, and you're going to say, well, the heck with this. I'm just going to go start eating ice cream. I'm doing everything I can, and it's not helping me out there. A master expects that you're going to run into hurdles out there, and that's where you start looking for other solutions, hire other coaches, other people out there. Well, what I did in taking a look at the A to B equals CD pattern was try to understand what was it that I was missing? Why didn't? Because I used to buy and sell just the one-to-one A to B equals CD because I thought that's the way it was supposed to work. But when those trades didn't work, it was like you hit your head upside the brick wall out there, and you're like, why? Why? Well, what I found when I put the bullish and bearish reversal candles was that was the real signal to both you and I. That at least gave us the odds that in this case here, in the case of platinum, daily chart, that sellers on top of the pattern getting to bar number 8, the following bar being bar number 9, we know that that's a pattern that can identify a top. You've got the 1 to 1.618 A to B equals CD. If you open up the art of timing the trade, you're going to find there where Tom says you do a 1 to 1.618. The market is likely to do something else. Well, in the case of platinum, it is doing that something else. It is pulling back. And its target to the downside would be $855. So you really want to know your P's and Q's. You really want to know your bullish and bearish reversal candles, and you want to know how to use them. Now, John, in the case of high-grade copper out here, the December contract for high-grade copper, the only topping pattern that we have, the most recent one, would be the TD setup 9 count, the one that formed back here on July 19th. That's not the one that is active. What we can see is how when that count formed, price came right back to where price had recently broken out. In fact, it had formed a hammer candle on August the 1st out there, and that breakout was 2.6435. At this stage here, high-grade copper got a different pattern than gold, silver, and platinum. Steve Rhodes filling in for Larry Pesavento. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Welcome back, folks. So I believe this is going to be the last segment here. We're running into some technical difficulties at the home office. I think they need to reboot everything. So we'll just finish things up during this next 8 minutes out here. The next question that came in is from Earl. Earl writes in, and Earl says, "Hey, Steve, has the ES given a sign for higher price?" So here's how we'll answer that. Let's just go take a look at the ES and see what it is that we know. Right now, the S&P is up 2 points out there. So basically, we've got a flat market. If we take a look at the ES mini, here's what we know, Earl. If you take a look at the left-hand portion of my chart out here, what you can see is that the ES mini clearly broke above a consolidation. The consolidation was the solid yellow lines out there, that rectangle. It lasted for about a month out there, and we had a breakout. I think it was last Friday. Big breakout, wide price spread, accelerated volume on September the 5th, whatever day that was, Thursday or Friday out there, and so that was a confirmation over time. What the ES mini wants to do is head up to 3071. That's the measured move of. That's the exact same distance move. So it's approximate. Let's not get too tied into whether it's 3070, 3075, but around 3071 is its move out there. Now the ES mini, just the break of that consolidation generated the message that it wants higher price. The real message yesterday and today has actually come from the NQ out there. And that is this: when you break through a consolidation, oftentimes, but not always, oftentimes price will pull back to test, in this case here, the top of the consolidation. This was a breakout to the upside. And what the NQ did yesterday and the day before and this morning earlier is come back and test the top of that consolidation, and it has rejected it. So the NQ, the signal it's giving to you and I is that it wants to move higher. In the case of the Russell, in the case of the Dow, they have not come back to test their consolidations. They're in full breakout mode. They're above daily and weekly profiles out there. They suggest they want to move to 27, 548, and 1604 respectively. But we got a caller on the line. I believe it is Bill. So let's go to our caller, Bill in Jupiter. Bill, thanks for calling. Thanks for holding. How are you this morning?
I'm great, Steve. Thank you very much. And that was quite a dissertation on mastering technical analysis. I don't know if anybody's gone as deeply as you have, Steve, and put so many different factors together, indicators together to really understand and be able to read correctly. But maybe that's why you're the #1 market timer in the country. So well deserved. My question for you this morning is, and I'm trying to really get, really master this myself. So can you take a minute and tell us about identifying tops and bottoms, which you've sort of been doing and you do almost every day. But if you could go over that again, that would be great.
So give me something specific that you're trading that you focus on, where, you know, is there some instrument
Perfect.
that?
Sure.
Yeah.
ZB, the 30-year bond. Last night it made a TD9 count. And now it's on the third wave, I believe, and yet it did not. Well, it seems to have formed the bottom, but I might be calling that wrong, and I'd like you to look at that and tell me how you would pick the bottom on the bond, 30-year bond.
What's the time frame, Bill, that you're looking at?
Steve, I'd like to maybe, if not intraday, maybe an overnight or a couple of days. I'd like to take advantage of the bottom and maybe take an intraday or a swing trade.
So let's just take a look at, so there are a handful of patterns that when they're present, they can identify a top or bottom. They're not going to be present at every top or bottom. So I do want to make sure that we take a look at that. But when these patterns do show up, we really pay attention. One of those patterns is that Rhodes Momentum Indicator signal, and it works at tops and it works at bottoms. And it's been a pattern that was present before the beginning of every single bear market. That doesn't mean that when one of the patterns is present that you're going to see a bear market. It's just that every bear market has begun with that. And what that means is that it's really not the first high for a top that is going to be the significant high. It would be a following high that does with less energy out there, less relative strength. And then, now just by mere fact that that is present doesn't mean that that's going to be a top. It is like, Bill, you live in Jupiter, you listen to the weather forecast, and almost every day they can forecast rain here in Florida. Okay, but it doesn't necessarily mean it's going to rain really where you live. So that's the same pattern. When the pattern is present, it says it might rain. Doesn't mean that it will rain. When it tells us that we've got thunder showers or a storm to prepare ourselves for is when we get that bearish reversal candle at the top or a bullish reversal candle at the bottom. Specifically with regard to Treasury bonds, here's the 30-year Treasury bond. We can see that price had been moving higher, doing with less relative energy. The actual confirmation of that top came into play when this bull sash candle formed on September the 9th. That suggested that price may pull back all the way to where it most recently broke out. And that breakout level was 153.27. Now, what could get in the way from a swing trade standpoint during that process or prior to price getting down there? Well, today looks like it's going to be day number 6 of a TD setup 9 count. It would be on bars number 8, 9, or the bar following 9, as long as those are the lowest lows of the 9 count. And should that 9 count occur before 153.27 out there, that would suggest that that would be your swing trade buyable bottom. Now, the beauty of that pattern is that if on day number 11, the day following 10, if there were to be a lower low, you would have entered the trade based on that TD setup 9 count, and you would also exit the trade immediately because that pattern was violated. And that would suggest that price is pulling back to 153.27. So that is one pattern that helps us to identify tops or bottoms, and we combine that with bullish and bearish reversal signals. Another pattern is a TD9 count that we had taken a look at for tops and bottoms out there. We looked at that in platinum. We looked at that in silver before the break, so I don't want to spend too much time doing that. So that's, now it always depends upon the time frame that you're trading. And so to the extent that you're an intraday trader, you just select whatever that time is. So here is the 30-year Treasury for its 30-minute time frame. So what do we know so far about the 30-minute or the shorter term time frame for it? Well, what we know is that a key level of support didn't hold. That was its TD setup 9 count out here, which was 160 and 26.30 seconds out there. In fact, we saw price break through that and close below that at 4 o'clock this morning and once again at 4:30. And so it's not surprising that the little counter trend rally that took place after that really ran into resistance where it had previously run into resistance out here. Right now, on a 30-minute basis, the only trade to potentially consider, and I wouldn't do it at this stage, would be to go short right here, right now. I'd rather see you go short at some other pattern that might complete out there. And on a 30-minute basis, I don't have that. Maybe you might say, hey, Steve, I don't really use the 30-minute basis. I use a 60-minute basis. Well, if we put the 60-minute time frame out here, what you know is the place to sell at this stage would be any counter trend rally up to 162 and 27/30 seconds. That's the last place where price broke down. We can see on the 60-minute basis that it did form a short-term bottom. In essence, a sideways-ish move, because at 5 o'clock last night, that was the bar following bar 9. Bill, that's all I've got for you. Unfortunately, because of the technical problems I've got at the home office, I've got to end the show right now.
Steve. No, that is fantastic. I greatly appreciate that. Incredibly helpful. And that's it. That's how you master probabilities. Very good. Terrific. Thank you.
Okay, thanks so much. Folks, stay tuned. I won't be back with you next few minutes, but Tom and Tommy will be back with you, and I'll hope to see you at 1 o'clock. Take care and have a great day.